Hi guys, good morning all and welcome back to my YouTube channel. And today's video is going to be one of the important video, especially for option buyers, especially for hero or zero traders, because today in this video, I'm going to reveal one secret momentum strategies which many people are not aware of. And the same strategies I have included in my new course for hero or zero traders, that course which I'm launching tonight. And in that course, total I have discussed 10 strategies. So now what is so important about this strategy? Because being a option buyer, being a hero or zero trader, you are trading against the tide. So you have to have a price action setup which can give explosive momentum. And you should focus only on such kind of setups. And out of 10 setups which I discussed in my new course, but as a gift for all my YouTube followers, I'm sharing that one momentum strategy free for all of you. So now let's go to my laptop and let us see what is that momentum strategy is all about. Okay, let us start with this. Momentum strategy free for hero or zero traders. So why I mentioned as a free, because this setup I've included in my this new course, but here I'm sharing it free for all of you. So now we'll first discuss why momentum is important for hero or zero trader or option buyers. Hero or zero traders needs explosive momentum in the underlying asset to offset time decay or theta. When you are an option buyer, especially when you are trading on expiry days, you should know that you are trading against the tide. That means winning probability is lesser on your side compared to option seller. In that time, you have to have a setup which can give explosive momentum. What is the explosive momentum? Explosive momentum means you bought a option here. Suddenly it should go like a rocket. So you want your option to jump like a rocket. So they need explosive movement in the underlying asset and sharp price action setup that can trigger quick and impactful option price moves. If underlying is not moving very fast, it is going like this, then your option also can move slowly or it can stay like this. So that's why you need explosive momentum in underlying, and that is what we are going to discuss. What is that one setup which can give high momentum most of the time? You have to note that all strategies are only probability, not certainty. So proper risk management and proper position sizing is a must while trading in hero or zero. So strategy is not only thing when you're trading in hero zero, also risk management, position sizing, very important. Now let us see what is the criteria for this setup. This setup main criteria is look for the days where that entire day did not enter the previous day range. That means what? Let me show you here. You can see here on the slide, there is a chart I have given. This is the previous day, right? This day, that market closed here. This is the close. This is the high and low maybe somewhere here, right? So you have drawn a range for that day. We don't have that day's low. For example, let us consider that this is the range for previous day. Next day market opened here. This is the opening. This is where it took the support. It made a high and finally at 3:30 somewhere it closed here. This is what I mean to say standalone day. Standalone day means the entire day price range from the first candle to last candle did not come inside the previous day range. This is the previous day range. It did not traded inside the previous day range. If this same price action had it gone inside the previous day range, then it is not a candidate for us. This is not a standalone day. It should be like trading away from the previous day range. But touching the previous day range is fine, but not entering it. What I mean to say, this is the previous day high, right? Previous day range. If it comes and takes support and suddenly bounces, that is fine. Because it did not traded inside the previous day range, it reversed from there. But same time, if it broken previous day range and came inside the previous day range, then this is not applicable. Now, next what you do, once it made a standalone day, mark the both range borders, that is the high and low. So you have seen that, okay, this day it made a standalone day. That means entire day price traded away from the previous day. So then what you do, then you will mark the borders of that day. What is the border? Border is the high and low of that day is the border. So you have marked the upper border and lower border, right? You have marked only this day upper border, lower border because it was a standalone day. Now, once you mark that border on the both side, next wait for coming session. It is not that same day or next day it comes and touches that border. this standalone day, next day price can open anywhere. Price can open here next day, or price can open here, anywhere it can open. So what you have to do is you have to wait for coming session for price to reach that borders for big momentum to happen. Okay, so that means you have to watch price action closely whenever price reaches that border. That means you should closely watch for this border. When price comes either this or this, then big explosive move can come. That means next day market opens here, and if it comes here, then you can expect a big explosive move. Or if it opened gap down, and once price comes to this border, you can see a explosive move. So that is what this setup is all about. That means when price comes to that border, you will either buy call or put whatever it is, and then you expect price to make a big bounce. So this setup is one of the very powerful setup. I've done the back testing, though I agree that it doesn't work every time, but most of the time it can work. And that is what trading is all about. Trading is not about finding the setup which works 100% of the time, because no setup works 100% of the time. We only need setups which can work most of the time. And this is one of those setups. Now what we'll do, we'll go to the spot chart and see a couple of example when this kind of setup happened on expiry day and how option behaved on that day. Okay, now let me take this recent example in Nifty that happened just few days back. December 2nd, price opened here and closed somewhere here. This is not a standalone day, right? This is not a standalone day. Why? Because previous day high was here, low was somewhere here, and this day traded inside the previous day range. So this day is not a candidate for us, right? Just I'm showing you that this is not a candidate for us on 2nd December. Now what happened on 3rd December? 3rd December, you can see that 9:15 to 3:30 market opened here, reversed from the previous day range and made a standalone day. What I said, if it reverses from the previous day range, then it is fine. Only thing is that it should not enter inside and start trading inside the previous day range. Here you can see that on 3rd December Nifty only took the support near the previous day range and made a reversal, did not enter it. So this is our candidate for standalone day. So next what we'll do, we'll mark both the high and low of that day and see next day what happened. Next day you can see that 4th December at the opening only price took the support here and started going up. All right, it started going up and initially it made a big move and finally it made a breakout from that range. So once that breakout happens, then this level will become invalid. So what we can do is we can remove that level, and then which level is important? Now only this level is going to be the important. While this level is now going to be important because this level is not yet penetrated, not yet reached this level, right? So this level is going to be the very important. So let us see next few days what happened. 4th December it did not reach. 5th December what happened? 5th December this candle exactly took the support from that border and then made a huge move, right? This made another setup also, that is the fake breakout. You can see that this was the previous day low. It made a fake breakout and made a big move. Anyway, we are not discussing fake breakouts today. We are going to discuss about the setup, how sometimes such levels can work as a strong level for the price to make a reversal and give a momentum. Now this is around 24,300. That is the level where Nifty made a huge bounce. Now let us go to option chart and let us see what happened. What time reversal came? Around 10:55, and around 10:55, that means somewhere here 23,400 call option was trading say around 150 or 160, and within few minutes it went up to where? It went up to 400. From 160 to 400 within few minutes it made a big move. Then finally it went to almost like 570, 580. But what you need as an option buyer on expiry day, you need immediate momentum, right? Otherwise you know that you are trading against the tide. That means expiry day, because of the time decay, if the price doesn't move immediately, then because of the theta decay, that option going to become zero. So that is what you have to know, some momentum strategies which have high chances of making a big bounce. And that is what we discuss in our new course, that is Hero or Zero Trading, where such 10 powerful strategies we discussed. Another example, I have already marked it when it recently happened. That happened on 25th November. Why 25th November is a standalone day? Because 22nd November made a high and low, that is the range. Next day, that is 23rd November, price opened here, right? And entire day did not enter this range. So this becomes your standalone day. So why 22nd is not a standalone day? Mark the range. 21st high and low. This is the range, and you can see that it is trading in that range, right? So this is not a candidate for this setup. This is not a standalone day. So this is the standalone day, right? So now what you will do, once day ended at 3:30, you will mark the high, you will mark the low of that border of that day. That is the day's border, right? This is the high, this is the low, and this black bar which I marked, that you will mark and wait for the coming day price to act around that level. And you can see that on 26th exactly, that is where price made a reversal. But the thing is that 26th was not a expiry day, so we will not consider it. We'll only consider when expiry day this kind of momentum came. Just for your information, you can see that this was another range of that day, and from that range again price made a big bounce. Next day what happened? Next day was also not a expiry day. You can see that almost it came near that range, and finally it went to that range which was that border of 25th November, and exactly from there it made a small reversal on 27th. 27th was not expiry day. 28th is expiry day. Now we have to see what happened. 28th, you can see that price came here, took the resistance, and huge move, right? This level also got broken. So you can see that huge momentum from here. Almost how much? Almost 200 points within few minutes, right? And finally that level was broken. Once that broken, what I said, once that broken, that level is not important. Now you can remove that border. Now what we'll do, we'll see from here how much your option moved on expiry day, that is 28th November. Example, we have taken 24,300 put option, and what time big move came? It came around 10:15, 10:20, big move came. And what was that option was trading at 10:15, 10:20? You can see that around 52 rupees it was trading, right? Around 51, 52 rupees. And from there, almost it went up to 280, right? That is what, being a option buyer, being a hero or zero trader, you need precise entry. Same time, you need big momentum on your side. And after that, it went almost 450, 460. But we are not looking to hold on to trade on expiry day. It is not advisable to hold on to trade on expiry day for very long because of the time decay. Once you have seen that from 51, 52, it went almost 270, 280. That means almost that option moved 5 to 6 times. And within how many minutes? Within 1, 2, 3, 4, 5, 6. Around 6 to 7 candles. That means around 30, 35 minutes from 51 to 52, it went up to 270, 280. Okay. So I'm not trying to say that every time you'll get this kind of sudden bounce. Sometimes breakout can also happen. For that, you have to closely watch the price action. When price comes to those borders, and most of the time you can see a sudden bounce in underlying, sudden spike in option prices. That is what I discussed in my Hero or Zero course. This kind of 10 strategies I discussed based on high momentum. I discussed both on the spot chart and option chart. Like how I discussed here, you can see that I discussed here on the spot chart. Then I came and I discussed on the option chart. Same way, I discussed example both on the spot and option chart. And that is what the objective of launching my new course is, that many option buyers randomly they buy options without knowing where to buy, which strike price to choose. What is the fundamental behind hero or zero? How sometimes 1 rupee option can go to 50 times, 100 times, and though it happens very rarely, but how it happens? What is the delta and gamma concept? Everything I discussed in a very simple way in my new course. If you are interested, you can enroll for it and you can learn this kind of high momentum strategies. And another thing is that it's not only for hero or zero traders, it's also for option buyers or a directional based option sellers or a trader who take credit spread or debit spread based on the direction, or a future trader. So this course is especially for people looking for the price action strategies where big momentum can come. So I shortlisted almost 10 strategies based on my experience of almost 20 years, as well as based on my back testing, and I have shared it in my new course. So that's it guys from my side. I'll see you soon with a new video. Until then, bye and take care.